firm was created in September 1998 when Coopers and Lybrand merged with Pricewaterhouse. In 1854, William Cooper founded an accountancy practice in London, England. It became Cooper Brothers 7 years later when his three brothers joined. William Cooper, 1826 to 1871, was an English accountant. He is best known for having founded the accountancy practice of Cooper Brothers that now forms part of PricewaterhouseCoopers. He was the son of Emmanuel Cooper, an important figure in the City of London and Deputy Chairman of London and County Bank 1. He first started his professional career as a clerk in the firm of Quilter, Ball & Co. In 1854 he left that firm to work on his own at 13 George Street in London. In 1858 he changed the name of the firm to W&A Cooper when his brother, Arthur, joined his practice, and in 1860 to Cooper Brothers, a name that is now famous. In 1898, Robert H. Montgomery, William M. Lybrand, Adam A. Ross Jr. and his brother T. Edward Ross formed Lybrand, Ross Brothers, and Montgomery in the United States. Robert Hyester Montgomery, September 21, 1872 to May 2, 1953, was an American accountant and educator. He also co-founded what is today the world's largest accounting firm, PricewaterhouseCoopers. Montgomery was a two-term president of the American Institute of Certified Public Accountants, ICPA. Montgomery was the author of numerous books on auditing and taxation, including Auditing Theory and Practice, a bestseller originally published in 1912 which is still in print today. He was successful in 3 professions despite his lack of formal education, having not even completed high school. Montgomery quit school at the age of 14 and went to work in order to help out his family. In 1889 he got a job as an office boy at an accounting firm in Philadelphia. There he learned accounting and was made partner after 7 years. 2 years later in 1898, Montgomery and 3 of his colleagues, William M. Lybrand, Adam A. Ross Jr., and his brother T. Edward Ross, formed Lybrand, Ross Brothers and Montgomery. 2 years later the firm opened an office in New York City under Montgomery's management. In his spare time Montgomery learned law. He was admitted to the New York bar in 1904. Montgomery established his own law firm, Robert H. Montgomery, attorney at law, and worked on many difficult tax cases for clients. In 1905 Montgomery led a reorganization of the American Institute of Certified Public Accountants, ICPA. He created the Journal of Accountancy, then called the American Journal of Accounting. The first issue contained his professional standards. He was president of the ICPA for 2 two-year terms, first in 1912 and again in 1935. Next, Montgomery also got into the field of education by developing a curriculum in accounting for Columbia University. He was hired as Columbia's first accounting professor in 1910 and stayed there until 1939. Montgomery saw the need for a book on auditing. In 1912 he wrote Auditing, Theory and Practice. This was the first American book on auditing. For the 7th editions 2 other authors joined him and the book was retitled Montgomery's Auditing. After Montgomery's death the 8th edition was published in 1957 by 2 other authors. It is still in print and is now in its 12th edition. Commissioned as a lieutenant colonel, 1918, during World War I, he was generally referred to thereafter as Colonel Montgomery. He received the ICPA's Gold Medal Award in 1949. In 1950, he was inducted into the Accounting Hall of Fame, in the first year of that award. Montgomery was a highly respected leader of the profession of accountancy for over 60 years. His influence is still felt in the areas of auditing theory and practice, federal income taxation, professional accounting organizations, and accounting education. In 1957, Cooper Brothers, along with Lybrand, Ross Brothers and Montgomery and a Canadian firm, MacDonald, Curry & Co., agreed to adopt the name Coopers and Lybrand in international practice. In 1973, the three-member firms in the UK, US and Canada changed their names to Coopers and Lybrand. Then in 1980, Coopers and Lybrand expanded its expertise in insolvency substantially by acquiring Cork Gully, a leading firm in that field in the UK. In 1990, in certain countries, including the UK, Coopers and Lybrand merged with Deloitte, Haskins and Sells to become Coopers and Lybrand Deloitte. In 1992 they reverted to Coopers and Lybrand. In 1849, Samuel Lowell Price, an accountant, founded an accountancy practice in London, England. In 1865, Price went into partnership with William Hopkins Holyland and Edwin Waterhouse. Holyland left shortly afterwards to work alone in accountancy, and the firm was known from 1874 as Price, Waterhouse & Co. The original partnership agreement, signed by Price, Holyland, and Waterhouse, could be found in Southwark Towers. Samuel Lowell Price, 1821 to 1887, was an English accountant. He is best known for having co-founded, with William Hopkins Holyland and Edwin Waterhouse, the accountancy practice of Price Waterhouse that now forms part of PricewaterhouseCoopers. He came from Bristol and was the son of a local stone potter. He went into the accountancy profession at an early age, joining the local firm of Bradley, Barnard & Co. In 1848 he went into partnership with William Edwards, but by 1849 that partnership had been dissolved. Later that year he became a sole practitioner running the firm that is now famous. In 1865 he was joined by Holyland and Waterhouse, and as they became more active in the firm, he was then able to devote much of his time to the Institute of Accountants, and then, when it was formed in 1882, the Institute of Chartered Accountants in England and Wales. Price died in 1887. By the late 19th century, Price Waterhouse had gained recognition as an accounting firm. As a result of growing trade between the United Kingdom and the United States, they opened an office in New York in 1890, and the American firm expanded. The original British firm opened an office in Liverpool in 1904, and then elsewhere in the United Kingdom and worldwide, each time establishing a separate partnership in each country. The worldwide practice of Price Waterhouse was, therefore, a federation of collaborating firms that had grown organically, rather than the result of an international merger. In a further effort to take advantage of economies of scale, P.W. and Arthur Andersen discussed a merger in 1989, but the negotiations failed, mainly because of conflicts of interest such as Andersen's strong commercial links with IBM and P.W.'s audit of IBM, as well as the two firms' radically different cultures. It was said by those involved with the failed merger that at the end of the discussion, the partners at the table realized they had different views of business, and the potential merger was scrapped. In 1998, Price Waterhouse and Coopers and Lybrand merged to form PricewaterhouseCoopers. At that time, MCS was the largest and fastest growing division. ERP projects required radically different staffing models, skill development, risk management, contracts, employee compensation, and fee structures. The increasingly technical projects were one and done, while post-project add-on work was common. The entire client management approach was different than of maintaining an audit relationship. Instead of engagements requiring small teams a few weeks on site, ERP projects spanned 18 months to 6 years at the client, frequently with teams of 200 or more clients, contractors, and consultants. MCS staff and leadership chafed under the strict rules governing accounting firms despite reorganizing personnel with new titles, promotions, and pay grades. Few consultants and partners were CPAs and thus were treated differently than their tax and audit counterparts. Independence rules required consulting managers, directors, and partners to completely divest personal investments of all audit clients. Employee incentive bonuses aligned to major project goals were not allowed, nor was MCS permitted to accept contingency fees from its clients. Traditionally, PwC won client relationship partner as a liaison and coordinator, receiving a share of all work for that client despite the contracting and managing partner. Consulting engagements rarely involved a client gatekeeper, and MCS partners fought paying an audit partner a share of tens of millions of dollars in revenue based on tradition. The largest personal services company in the world kept expanding while infighting between partners and practices only grew. PwC was not the only member of the Big Five to experience cultural and financial rifts between accounting and consulting. In 1997, Arthur Andersen's Andersen Consulting filed for arbitration, reaching an agreement in 2000 to finalize the split of the two partnerships, with Andersen Consulting rebranding as Accenture. Also that year, Ernst & Young became the first of the Big Four to sell its consulting services practice outright, which it did to Capgemini. Capgemini SE is a multinational information technology, IT, services and consulting company, headquartered in Paris, France. The fallout from the Enron, WorldCom and other financial auditing scandals led to the demise of Arthur Andersen, reducing the count down to the Big Four and spurring passage of the 2002 Sarbanes-Oxley Act, SOX. Among other restrictions, SOX severely limited overlap between management consulting and auditing services. PwC Consulting continued to split itself off, conducting business under its own name and branding rather than as the MCS division of PwC. Around July 2000, PwC began to prepare for either an acquisition or IPO by developing separate financial records that would be required for due diligence. PwC leadership began to seek buyers, with an initial interest by Hewlett-Packard for a reported $17 billion, but negotiations broke down in 2000. In 2000, PwC acquired Canada's largest SAP consulting partner, OmniLogic Systems, to add to its relatively nascent consulting presence in Canada. Almost a year after the collapse of Arthur Andersen in 2001, Arthur Andersen, LLP affiliates in Hong Kong and China completed talks to join PricewaterhouseCoopers, China. PwC announced in May 2002 that PwC Consulting would be spun off as an independent entity and filed with the SEC for an initial $1 billion IPO to trade in August. Because PwC Accounting Partners owned 60% of PwC Consulting, an IPO or acquisition was seen as the only way to split the two firms without decimating the consulting arm's working capital. PwC Consulting leadership continued to fluff financials by expanding across-the-board pay cuts, terminating its variable compensation program, and furthering deep layoffs, all rare actions in the industry. In June 2002, PwC Consulting hired Continental Airlines' Greg Brennerman as CEO to run the global division. A week later, it was announced that an outside consultancy, Wolf Olins, had created new branding for the consulting group, called Monday. The firm's CEO, Greg Brennerman, described the unusual name as a real word, concise, recognizable, global, and the right fit for a company that works hard to deliver results. In July 2002, it was rumored that PwC was in talks with an unknown public company, as no PR space or announcement for the impending IPO had been set. Those rumors were confirmed August 2002, when PwC announced it was selling Monday to IBM for approximately $3.5 billion in cash and stock. Monday was consolidated into IBM Global Business Services while partners became employees for the first time. The acquisition had a modest increase in the size and capabilities of IBM's growing consulting practice, as IBM had 150,000 employees at the time, while Monday carried just 30,000 at the time. 34. However, it was seen as a win by IBM since PwC Consulting/Monday's valuation had suffered after the post-9/11 recession. PwC began rebuilding its consulting practice with acquisitions such as Paragon Consulting Group and the commercial services business of Bearing Point in 2009. The firm continued this process by acquiring Diamond Management and Technology Consultants in November 2010, and PRTM in August 2011. In 2012, the firm acquired Logan Todd & Co., a digital analytics and optimization consultancy, and Ants Eye View, a social media strategy development and consulting firm to build upon PwC's growing management consulting, customer impact and customer engagement capabilities. On October 30, 2013, the firm announced that it would acquire Booz & Company, including the company's name and its 300 partners, after a December vote by Booz & Company partners authorized the deal. On April 3, 2014, Booz & Company combined with PwC to form Strategy. On November 4, 2013, the firm acquired BGT Partners, a 17-year-old digital consultancy. In October 2016, PwC and InvestCloud, LLC, the world's largest digital app platform, announced that they entered into a non-exclusive joint business relationship, designed to accelerate adoption and implementation of the InvestCloud digital app platform. PwC will be a preferred implementation and strategic partner of InvestCloud, focused on enterprise delivery and innovative development of new financial app capabilities. In November 2016, PwC acquired technology/consulting firm NSIDMCC, Salesforce's largest implementation partner in the Middle East. In January 2017, PwC announced a 5-year agreement with GE to provide managed tax services to GE on a global basis, transferring more than 600 of GE's in-house global tax team to PwC. In addition, PwC would acquire GE's tax technologies and provide managed services not only to GE but also to other PwC clients as well. In November 2017, PwC accepted Bitcoin as payment for advisory services, the first time the company, or any of the Big Four accounting firms, accepted virtual currency as payment. Veritas Capital acquired PwC's U.S. public sector business in 2018, and branded the new company as Guidehouse. In February 2020, PwC announced a new collaboration with technology firm ThoughtRiver to launch AI-driven law tech products aimed at standardizing PwC's service of UK law clients. The Academy of Motion Picture Arts and Sciences, AMPAS, has utilized the services of PwC to tally the votes for the Academy Awards since 1935. In addition, the company oversees AMPAS elections, prepares its financial documents, and is responsible for the group's tax filings. In January 2023, the firm was involved in a controversy when it approved Americana's AMER 3 balance sheets with accounting inconsistencies of around $4 billion. This caused volatility to company's price on the Brazilian stock exchange and losses to the company's shareholders. After verifying the impacts caused, the CVM, Brazilian body that regulates the stock exchanges, opened investigations against the company's auditors to determine responsibilities. PricewaterhouseCoopers is an international professional services brand of firms, operating as partnerships under the PwC brand. It is the second largest professional services network in the world and is considered one of the Big Four accounting firms, along with Deloitte, EY, and KPMG. PwC firms are in 157 countries, across 742 locations, with 328,000 people. As of 2019, 26% of the workforce was based in the Americas, 26% in Asia, 32% in Western Europe and 5% in Middle East and Africa. The company's global revenues were $50.3 billion in FY 2022, of which $18.4 billion was generated by its assurance practice, $20.7 billion by its tax and legal practice and $11.6 billion by its advisory practice.